Hello, ladies and gentlemen. It's our, I guess, last program for this year. It's last Wednesday of 2023. And we'll start immediately with our guests. As usual, Dr. Milan Sambrak. Welcome to the show, Milan.
Delighted to be here. Thank you for inviting me.
My pleasure. And Jim Eid from Eid Foundation. Welcome to the show, Jim.
Thank you, Sasha, for inviting me. I'm happy to be here.
It's my pleasure. So this year, generally speaking, I think it was good for us, for all three of us. And we used different strategies and perhaps different results somewhat, but they're all positive. They're all in green. They're all in plus, and that's very important. So, Jim, what's the most interesting in this year as investments are concerned? What was the most memorable experience?
Well, I think that my belief that semiconductors were going to be a big part of the movement upwards. And I think, we both talked about NVIDIA throughout the year, and I ended up selling because it hit my target goal. But I'm also in Taiwan semiconductor stocks, and I've been tracking. I have a lot of AMD stocks as well, and I've been actually looking at Intel now. Intel seems to be getting a lot of significant coverage because they've, after being kind of a sleepy company for a long time, they've started to become aware that they need to get into the AI business. And so they're making progress, and their stock is starting to go up. So I'm also thinking of adding Intel. I'm not sure when I'm going to be willing to pull the trigger because I still have exposure in the Taiwan semiconductors and AMD. So I don't want to go overboard in the semiconductor industry, but I think it's a matter of national defense. So I think it's a winner, and I'm going to stick with that strategy.
Excellent. AMD actually done fantastically well in the last few weeks. It was on a tier. It went up from some actually less than 110 about 2 months ago or so. It went up to 144 or so.
Yes.
It's a huge move.
It's incredibly positive recently, and I think that there's no reason for that to change, at least none that I can see. I also have been harping on the Fed for their inappropriate raising of the rates in response to the COVID pandemic inflation that was caused not because the economy had been overheated, but because the distribution system, the global distribution system had broken down. And now that the global system has repaired, the inflation seems to be coming down. So they're going to start to lower interest rates in 2024. But they were almost trying to cause an artificial recession because their standard thinking, the historical thinking has been that the only way to combat inflation is to cause a recession. But we still have strong employment. We still have strong wage growth. People are out. Apparently, the Christmas seasonal spending was great, so people are still spending money. I see no reason for them to be furthering their mistaken belief in raising interest rates.
Jim, earnings.
Yes, and the earnings for many companies were, record-setting.
Absolutely. Okay, Milan. So your stick is 500.
You started this program by saying that the market is up today. Had this program taken place at 11 a.m. instead of 1 p.m., you would have said the market is down today.
Really? No, I looked right when we started, and Dow was up, and S&P and Nasdaq was slightly down. But I think it's a kind of a during the day fluctuation. So it's hard to say, okay, it may end up down today.
Now, what James was talking about is the idea of picking individual stocks, which we don't recommend. I think it was Burton Malkiel who stated that small investors need a fund which is low operating costs and which reflects the market as a whole. And so John Bogle subsequently said, to underscore that idea, is buy the haystack, don't look for the needle in the haystack. And so even Warren Buffett, he is sort of an outlier in that he has beaten the market over a very long period of time, and very few people have been able to do that. But even Warren Buffett himself says now, buy the haystack, don't look for the needle in the haystack. So he would perhaps not agree with your choices there, James, because he talks about not looking for the needle, but buying the entire haystack. And that's what we talk to our members about. Monday Morning Millionaires, an organization that has about 300 members. And we talk about having a core portfolio in which you do nothing but have an exchange traded fund, which tracks the American economy as a whole, which tracks the S&P 500, which is a very good representation of the American economy as a whole. If you ask anybody on the street what a mutual fund is, they will know. And the reason for that is Wall Street advertises mutual funds so heavily because they make a ton of money on mutual funds. Buying them, exit strategy during the operations. Now, an exchange traded fund is similar to a mutual fund in many ways, except instead of buying it from an organization that's selling it, we're buying it from another investor, like any other security. And we can buy that at any time of day. Mutual funds, you can only sell at the end of the day or maybe at the end of the week. So most people have not heard of exchange traded funds, but that's what we recommend. Because first is this particular year, the market year to date is up 24%. That's all.
I'm trying to think when last time I saw the person who would bought mutual funds. Are they still exist? You can go and buy them.
Sasha, I think the people like you or people who are watching this program are much more sophisticated than the average investor. And so they would not buy mutual funds. Yeah. And you don't know anybody who does because you keep company with people like yourself who are not into that sort of a thing. So mutual funds are heavily promoted, and people who are buying them are, I would call them innocent because they don't have the sophistication, the understanding that people who watch this program do. So, about a week ago, exactly a week ago, Powell stressed the central bank's commitment to bringing inflation down to close to 2%. At its height this year, inflation was at 9%. It's been down significantly since that time. So we have a lot to be happy about.
It's at 3% now.
Sorry?
It's at 3% now.
Is it? Yeah.
Yeah.
Yeah. In February 2020, we experienced the worst drop in market history. Since that time, the market is up 24%. People who are holding the market as a whole have done very well. Yes, some individuals have been able to select stocks which have outperformed the market. But the question is, why would you want to take the risk required to outperform the market when the market itself
Because of Magnificent Seven, only because of Magnificent Seven.
Well,
The seven samurai.
yeah, you mentioned the Magnificent Seven the last time, and I stated that was a name that arose from a movie that the Japanese producer and director Akira Kurosawa had put together, The Magnificent Seven, the Samurai Seven. Of the seven, four died. So, you picked up from Magnificent Seven. If you take a look at what makes up the S&P 500 and its predecessors when it started way back. I mean, I think S&P 500 was launched in, 1957. Anyway, it doesn't matter. When you take a look at its predecessors and take a look what made up that group then and what makes up that group now, many originals are gone.
Yeah.
Individual stocks, many individuals are gone, even though collectively the S&P 500 represents the American economy, the strongest economy in 100 years, the strongest economy in more than 100 years. Now, here's something interesting I find. Confucius said, study the past if you would define the future. Pay attention to the past. Warren Buffett said, if understanding history is what it takes to make money, then librarians will be the richest people on the planet. So it doesn't entirely agree with Confucius, but somebody, a linguist, said history does not repeat itself, but it rhymes. That is, what's happening today is very similar what you. So
Milan,
we're yeah.
you see, you are very often relying on Warren Buffett and his mythology
Not a
and
fan.
his life, and I think we can discuss his view on maybe a war between USSR and Finland in 1940, and maybe he still remembers this war. I'm pretty sure. But one thing, he didn't make it to the market wizards because
Mhm.
returns are a laughing stock to real market wizards. He's nobody to compare to real market wizards
Sasha,
because what
Sasha,
he's making is the sheer size of his investment portfolio, his dividend stocks, which he bought in the late 50s, early 60s, and he keeps them still till now. And it's a multiplying effect of
sure.
uh, this dividends going on and on. But it's very difficult today if you follow really strictly Warren Buffett, which is in fact not easy thing to do because by the time that you read that he bought a stock, Apple, for example, that he hates it and he doesn't understand it and he would never touch it, all of a sudden he has 1% of Apple stock. And by the time you say, oh, okay, maybe I should buy Apple stock. Well, next thing you read, he sold it all. He doesn't have any more else.
Well, he owns a lot of haystacks.
Hey, Sasha and Jim, just really quickly, I saw in the investment news that a major financial wizard, at least some people think he's a major financial wizard, has been railing against the financial situations of the U.S. and all along those lines. So I was wondering if Jim had any thoughts, because apparently Elon Musk was on a recent investment show with a lady named Kathy Wood, and he was bemoaning the high regulatory burden faced by publicly traded companies, the pressure from shareholders that limit efficiency, and how passive investment is stoking volatility. So apparently Elon Musk is on a war against the financial market, even though he has Tesla and SpaceX and a number of other things. So I didn't know if y'all had any thoughts or if y'all even heard of this interview that Elon Musk went on an attack against the stock market.
Was this 2023 or 1967 that he was
This is
doing it?
2023. He just did it like third.
Because I've heard that my entire life.
Yeah. No,
But
Sasha,
no,
back to your comments on Warren Buffett and the market wizards. How many of the market wizards have been successful for more than 60 years? Some of them haven't even been born then. And so you're talking about short-term performance for all of them. And
some
short-term,
of them, listen, some of them are already passed away, although they were younger than Warren Buffett. So it's, well, those who passed away, we can establish their track record. And it's absolutely incredible. It's awesome. We're talking about hundreds of percent a year. And the fact is that all of a sudden this year I was in that league. I'm extremely happy about that. I don't guarantee that I will be so successful next year. Absolutely not.
I guarantee that you will not. I guarantee that you might be so successful next year, but over the long run, I guarantee that you will not, based on history. Now, you know that the average investor trails the market, doesn't do as well as the market. Equaling the market is so simple. It's so easy. People just need to buy an exchange traded fund which tracks the S&P 500. They will equal the market. And why would you want to take risks that are required in order to outperform that when the market itself has given us an average, not inflation adjusted, about 10% annually? And you only
Okay,
need
I'll
about
talk.
annually to live on. Why would you want to take the chance?
Okay,
Unless,
I'll explain.
unless you want to run a fund portfolio. Now, a lot of
Yes,
people,
I wanted to say
yeah,
that. You mentioned
a
core
lot of people
portfolio.
enjoy trading and picking stocks and so on. And we're for that, but we recommend that they don't do that in their core portfolio. Their fund portfolio should be a small enough percentage of their overall investment so that if they lose it all, they don't have to start eating cat food.
Discretionary funds. You can
Discretionary.
afford to lose.
And it can be a lot of fun, but we recommend that people don't keep a track of their results because their results will not be enviable, for sure.
Okay, let me answer, if I may. If I may. I've just looked at my fund portfolio. It now exceeds profit for last year of 350%.
You're a market wizard, Sasha. Not everybody is.
That's
Hold on.
pretty good.
This is okay, except what to do next. This is the question. 350.
Yeah, yeah.
I think by the end of the year it will be 365, maybe 270. So there is a great temptation to go into cash 100%,
Yes.
and then start slowly getting to trading for next year. The reason that I don't do that is simply that by doing no trading at all, but through a incredibly astute selection, my portfolio makes 3-4% a day without me touching
You're
it at
4%
all.
of the Sasha, you're a market wizard. You're
I
a
don't touch it.
you know.
I will read to you all my selections, and you will see what I'm talking about. I'm not greedy, and I'm willing to tell you all how it is. Uh, okay.
I thought there are people who say that greed is good.
Yeah. And Sasha's greedy. He's kidding you.
Yeah. Okay. Okay. Here we go. 1,000 shares. I'm talking about fund portfolio only.
Okay.
1,000 shares of CABC. It's symbol CM. Bought at 42.85. It's trading now at 48.33. Sold 10 covered calls on that, on which I'm losing $1,900. But this is very important because I'm planning to keep CABC in any case because it pays incredible dividends. Actually, today is a dividend day. It pays 90 cents for each share. So in this case, I'm going to pay I will be paid $900 in about 2-3 weeks or whatever. Okay, next one, CONY. It's a Coinbase derivative. It's a option income strategy ETF that pays monthly for covered calls what they're selling, and I bought it at 25.95. It's trading now at 29.69, and it goes higher and higher every day. So I'm making net profit of about $7,500, and that one I'm planning to keep simply because it pays incredible dividends. Like just go and see for yourself. Enbridge, stock Enbridge, Canadian gas and oil company, 1,000 shares, bought at 33.50, trading now at 36.44. Also sold covered calls against that, where I'm losing now $1,300, but I'm making $3,000 on the shares. Also planning to keep it because it pays incredible dividend. Newmount Gold. I don't have shares. I just sold cash covered puts. I'm winning on that trade, but I'm not closing that because actually I'd love to get the stock. If not, I will keep all the premium. It expires, I believe, January 12th, so it's quite soon. Okay, I closed today NIO. It's a Chinese car company. I had small position. I sold the 10 also puts, then I bought them back, made a few $100. It's nothing. Okay, Nvidia, I closed my previous positions. I still have only one position which is not closed. I sold 510 puts, cash covered puts, at 33.65 each. It's trading now at 32.60. So I'm making a little bit of money, but I'm planning to keep it. I'm not closing position. This one because eventually I can make I don't know a few $1,000s easy. expiring. Where is it expiring? February 16th. I'm planning on a big January move, so maybe in January I will close this position. Then same thing NVDY and TSLY. It's the same thing what I described on Coinbase. Same covered call strategy. I keep all of that. I'm making a lot of money on TSLY. I'm making a little bit of money on, well, a little bit of money. Okay, we're talking about $1,500, but I'm keeping it because they're paying dividends. The record date, the 6th of each month. It pays monthly dividends. So the record day is 7th of each month, and they're paying on 12th of each month. What else? Oh, silver. Okay, that's nothing. I have some units, 1,000. The trust iShares. Okay, and 1,000. I wanted to have a little bit exposure, so it's not really significant investment. I bought 1,000 shares, sold 10 covered calls, making a little bit of money. That's about it. That's it. So now, even if I want to go all into cash, I have to liquidate a lot of promising positions, including CABC, including Cambridge, including all this strategy, income strategy on covered calls, such as on
Dividend.
Coinbase,
Well,
Nvidia, and Tesla. So
liquidating at the top makes a lot of sense. Now, Sasha, there are many books on investing. If you search for books on investing, they come up with thousands of titles.
Sure.
Probably four to six that are worth keeping. And one of them was written by Burton Malkiel about 50, 60 years ago. It was called A Random Walk Down Wall Street. And that's worth looking at today and studying that book. And Burton Malkiel would ask you this. He would ask you, when you bought those securities, which are doing so well for you, who did you buy them from?
doesn't matter.
You bought them from somebody who's selling and somebody who has an opinion that's opposite of yours. Both of you
I
can't.
don't care about anybody's opinion, only mine.
Okay, right now, I would ask you this. For instance, you are a Mozart in investing, but a Mozart has to be born in the right environment. There are probably Mozarts in Africa too. Just given the number of people that are there, except the environment isn't Salzburg, it isn't Austria, it isn't Germany, it isn't an environment where music is so central. So you could very well be a market wizard, or could very well be a Mozart in investing, and very few people are. You cannot recommend that approach to the average investor. The other point is this, Sasha. Our members of Monday Morning Millionaire either are close to retirement or recently retired. If they're close to retirement, most of their income comes from their job, from their work. They don't have the time to spend trying to select a winning stock. How much time do you spend on your portfolio?
I'll tell you one thing. I'm very happy that I don't have any job. Neither I care to have any
Yeah,
job,
right.
because there is no job that would pay me the same money what I'm making on stocks.
Of course, as a market wizard, that will be true. That certainly would not apply to most of our members, would not apply to most investors. Most investors have to invest in a balance in an approach which balances the risk and the return in an appropriate way. And if a nearly risk-free investment in the American market has yielded nearly 10% annually for close to 200 years, why would you want more?
I have a one interesting question for you. What do you think? How many gynecologists and proctologists would be so happy to quit their jobs and trading stocks and making money?
Wrong question. Wrong question, Sasha. Most people go into medicine because it is a calling for them, not a job. It's a calling. Have you heard of Doctors Without Borders? Yes, you have.
Mhm. Yes.
Doctors Without Borders.
And also borders without doctors. Yeah.
Yeah. But there's also an organization to which surgeons belong, because Doctors Without Borders involves general practitioners, Mark. Surgeons have an organization called Cutting Edge, and Cutting Edge people are surgeons themselves. One of my friends is, and he's in his 90s, is going to Africa at his own expense. Now, Doctors Without Borders people, I say, they don't have a job, they have a calling. They do their work at their own expense. They go to countries where they are needed because they are needed, because they can improve people's lives, because they can uh, save people's lives, which gives their lives meaning. Their lives derive their meaning from being able to help others. And they don't do it as a job, they do it as a calling. So they go to parts of the world where they are needed at their own expense. They pay for room and board, and they come back at their own expense. How many people on Wall Street would do such a thing?
No, absolutely, you're right, Milan. But the one thing I would point out in both of your approaches, although there's significant differences, you're both using derivatives. And I wanted to point out, I think you made a great point about ETFs versus mutual funds. The appeal of mutual funds is that they get diversity, so they're not picking individual stocks. But you're recommending an ETF that does the same thing. It's a broader base, S&P or SPY, I think. And correct me if I'm wrong. The S&P might be setting a record today or soon for an all-time high, but you're trading derivatives, puts and calls, selling, and Sasha's doing the same thing with the stocks that he owns. So both of you have changed my mind about that. In 2024, I'm going to be trading derivatives for the first time. Because
hey, Jim, just really quickly, one of the things that I've heard about mutual funds, because actually Sasha in the beginning of the show asked whether anybody was buying mutual funds, and most of the people that I knew that were trying to get mutual funds, and y'all can correct me if I'm wrong, because y'all know much more about investment than I do, but a lot of those people that were trying to get mutual funds, it was part of their insurance package, because a lot of times the mutual funds are tied into insurance, and it's oftentimes elderly people that are getting mutual funds, from what I've heard, and a lot of people are putting that in their package if they are of a certain age range. Am I incorrect in that kind of philosophy? Because I know that's the first time I heard about people.
I would say, Mark, that most people don't buy mutual funds. Most people have mutual funds sold to them.
Mark, answering your question, look, you're mixing absolutely two not connected ideas. Idea of mutual fund is that hopefully you'll buy a few units here and there. Hopefully it will go higher in price. Hopefully you will sell it, and you will buy your trip to Aruba, maybe to France or somewhere else. The insurance, though, is completely losing proposition, because in order to use insurance, you have to do one thing, is to die. So as long as you're alive, all you have to do is just keep paying. You cannot touch the money. So your problem. I remember a very interesting thing. Unfortunately, he passed away. It was a couple here in Toronto. We were on one social event, and everybody was telling about what kind of great insurance they have at their jobs. And he was a member of teachers union, and he was telling about what kind of great coverage he has in case of injuries, in case of death, in case of his disability, and so there's all kinds of things. And his wife said, you know what? You're much more useful to me when you'll be dead than alive.
Was this an Ontario teacher, Sasha?
Yeah.
And Ontario teachers have done very well. The only people who have done better than Ontario teachers are civil servants anyway.
Mhm.
But I think that what we're talking about, a lot of time people, their mutual fund investments are in their 401ks, so they're for retirement purposes.
And that's where I was going, Jim, because the first time that I heard about the investment, there was supposed to be an investment, and I don't have it anymore, was actually a company called Mass Mutual, and that I had actually inquired about getting that, and that is what they advertised, is that it would be a way to invest, and this was like 10 or 15 years ago, and all along those lines. But I do know that Mass Mutual is still active, and I've thought about going back to Mass Mutual, but that is where I was thinking about. It is a form of 401k, which is a form of investment.
One of the things that I did when I was starting out in my career was I invested in the company that I worked for. But as Milan points out, I was lucky. And I never forget how lucky I was because my companies did well. And I
Charles
know
Schwab,
that there were people,
Charles Schwab, right?
AT&T first and then Charles Schwab.
Yeah.
And AT&T broke off into the baby bells, and I was in Pacific Bell. And, it was supposed to be the weak sister of them all, but it turned out to be very profitable. But it allowed me to buy my first home, which was, hard to do in the Bay Area at the time. But all of these things were a function of being lucky enough to work for good companies. And there are people working just as hard as I was, doing just as well at their jobs, but were companies that weren't profitable.
They were working for Enron, right?
They something like that. Exactly. It could have gone very differently for me. But then I got into investment because I had that starter money. I bought my house first. That was my first investment. And then when I got that settled, then I started getting curious about the market and making money in the market. And so my approach then was to study and to inform myself. And I never invested in anything that I didn't feel like I knew a lot about. So that's one approach. But the approach that Milan is suggesting is to invest in an ETF that's broad-based in what will overall be successful. And it's a low risk. It's not risk-free, but it's a low risk strategy. And what Sasha is doing is picking stocks that he knows, he's done research on. So if you're not going to have fun researching, maybe investing is not your game.
Yeah, I would agree with that. Hey, Jim and Sasha, just really quickly, one of the other things I was curious about is you earlier both mentioned the African continent, and there being market wizards on those continents. I actually, through another show that exists here, had the pleasure of meeting one of those market wizards because she is actually, her name begins with a B, and I can't think of it, the full name and everything, but she literally owns a oil company in Uganda. So she's actually doing well in that business, even though I know that everybody is big on gas and oil, but apparently she's done quite well in that company that she owns as an oil company in that country of Uganda. So maybe some of those market wizards are doing better in other industries in other parts of the world because they know those markets maybe better than we do and everything. But I don't know
we can't ignore the role of luck in our lives. For example, James, you happen to be lucky enough to be working for a company that did very well. I was born in 1940 when Germany invaded Yugoslavia. I was there. And in around 1943, 44, a bomb fell on the house next door and killed everybody in it. And here I am talking to you. Next door, the house next door.
Right.
So that has to be luck. The fact that Rosie is my wife is also a matter of luck, but never mind. That's
yeah. I also feel very lucky in that sense too. But a lot of it. That's one of the things that I recommend is don't get too sold on yourself. Don't think that you are a market wizard. Don't think that you are a genius, because it doesn't take much to give you a little comeuppance. And I've had my shares of picking wrong stocks and experiencing those types of disappointments. But what you get is with experience is more discretion, and you learn to trust yourself in certain areas. And this has been what I have found over the course of my investing career is that I've gotten better at picking stocks than I used to be. And for example, when I talked about semiconductors, it's a sector, it's not an individual stock. And then I look within that sector to see which of them is the most promising. And for this recently, it's been those that are producing AI type of chips or products that use those chips.
Experience is critical. Unquestionably, experience is critical.
Yes. And that goes back to your history, but learning from the past individually is important because you become more sophisticated as you get older, and you've had your ups and downs. But there's no question that what Sasha's approach with derivatives has changed my mind about how like buying and selling stocks individually has never been as profitable as his approach. So I've been listening to you, Sasha.
Uh, Thank you, Jim. You see, the quintessence of my approach is this: you reverse your steps normally, like in investments. Okay, you are buying something. Hopefully, it will go higher in price, and you will sell. My approach is very different. That I first sell. So I'm collecting money already on my account. Now, okay, it remains to be seen whether at the end of the day I will be very profitable, make a lot of money, or maybe I will lose some money, but I will acquire stock which will be assigned, and then I can sell covered calls. So, okay, I'm planning my position well ahead. It's like
Yeah,
in chess, similar to chess. Okay, so if
yeah,
this, then this, if this moves, then that move.
right.
So you're planning. I'm not gambling that okay, either you lose or you win. I don't play that game. I'm planning to win most of the cases and yet have defensible, sound position to continue. If I choose so, I may take a loss and move into something else. But with my conviction, more often, I'm taking assignment option.
An ideal way to make money is to buy the American economy as a whole, SPY, and write covered calls on it. When
Yes.
you're assigned and you are now in cash, you are in a position to write cash covered puts, sell
Yeah.
cash covered puts.
Yeah, this
Well,
is a great strategy, except look at the premiums that you can get from selling S&P 500 covered calls and premiums that you will get from NVIDIA or some other similar stocks. What kind of premium we are talking about? In some cases, we are talking about a percent, maybe percent and a half. And in other cases, which I described, you're looking at 25%, 30%.
you
It's
know,
night and day.
you're selecting stocks, Sasha, uh, which pay good dividends, right? That's an important aspect.
No, no,
No,
they're not. No, sorry. Stocks, you're right. I have some stocks like CIBC or Enbridge. Sure, they pay incredible dividends. And actually, why I bought these stocks in a fund portfolio? You know why? Because I had at one point my strategy, which is very flexible, it allows you from time to time, at least 3, maybe even 4 times a year, to go all 100% cash. I can't do it now because of certain stocks holdings, but before, when I didn't have stocks, I had only options. So when these options would expire, and I would keep the premium, and few times I was 100% cash. Now the question is, when you have already sizable cash resources, what you do with cash?
you
You're
sell
buying.
you sell cash covered puts, and you keep on doing that
By
until
all means,
it's put to you, and then
but no, I know it, but you're already sitting on cash, and you're talking. Okay, let's talk about say $150,000 in cash, your fund portfolio. Okay, so okay, you can sure sell some covered puts for sure. You can do some other things, but you cannot do it with all $150,000. You want to now generate certain cushion that may be less profitable than selling outright cash covered puts, but will bring you dividends. You can sell covered calls, and you are more or less in command of these positions. That's how I acquired the
let me talk
CIBCs.
about dividends for a minute. Let me talk about dividends for a minute.
Okay.
Many securities pay dividends, and
Mhm.
there is a group of securities called dividend aristocrats.
Of course.
And dividend aristocrats have been paying an increasing dividend every year for more than 20 years. How many of those are out there? Not that many.
No.
But there are portfolios that are made up of dividend aristocrats. If you take a look at those portfolios made up of securities which have paid an increasing dividend every year for more than 20 years, and compare that to simply owning SPY, it's produced about half the amount of growth, about half of owning SPY. That's why we recommend SPY. In SPY, yes, there will be some that will be paying dividends. The dividend aristocrats, most of them are in the SPY. But the dividend aristocrat portfolio has performed at half the rate of just simply holding SPY.
Hey, Jim and Milan and Sasha, I think I figured out what I need to invest in based on the fact that I'm spending way too much money on this particular company. Matter of fact, I just spent some money on it while you were doing this show and everything. So, Jim, I think I need to invest in DoorDash. So I think I need to start investing in DoorDash because I just made a DoorDash delivery and I'm spending money on DoorDash. Maybe I need to be actually invested in DoorDash. So what do you think? Should I be invested in DoorDash since I'm already spending money on them?
That is funny because that's something Mark. Well, and you think about all these things like a web ban or something like that with and pet kind of they all were kind of like started up with the internet was the next great thing, and the web was going to change our economy and all that kind of stuff, and most of those companies didn't make it, and some of the ones like DoorDash made it, and so now it's sort of like when you're talking about home delivery of food,
Right.
it's sort of like saying Xerox. You don't buy Xerox as the copy anymore, but we all still use many of us still use the term Xerox when you're talking about copying.
We talk about Kleenex instead of saying facial tissue.
Yeah, Kleenex, exactly. That's exactly right. So, DoorDash has kind of come into that. Everybody knows what you mean when you say that.
Yeah.
So, that was the winner, and I don't see any reason for it to change. But, that's not my field, so I don't recommend things that I know nothing about.
We don't pay enough attention to management. We look at when we take a look at the as a particular security and take a look at its earnings per share and all these fundamentals. Look at the fundamentals. We don't pay enough attention to management. An expression of investing badly is investing in buggy whips. You couldn't do any worse than invest in buggy whips. However, there are people who are still using buggy whips. That there are Amish and Hutterites and people of that sort who still drive horses and use buggy whips. And somebody who's making buggy whips well could be doing well by managing well. So how many of us examine management history in addition to the fundamentals? And
it's very difficult to study that.
Yeah, but Milan, along those same lines, if by some miracle we ever get rid of the prison system and everything, then there would be no need for handcuffs and everything. So then the handcuff business would be gone as well if we somehow managed to get rid of the prison system, because you wouldn't need handcuffs unless you were trying to tie up somebody for some other purpose.
Never mind. Well,
somebody put a message here that Big Corp Tech was paid me good dividends being secured for me.
Yeah, that was our founder, and she was saying that tech is doing good for her, and that Big Core Tech has done well for her in terms of dividends. So that was one of our founders.
Okay, this is what I'm trying to figure out. Which Big Corp Tech is paying good dividends? Anybody?
Well, I know.
IBM. Okay, we have an answer. It's IBM. Let's see. IBM. It's old and tried. IBM. Oh my God, NVIDIA is pushing ahead as no tomorrow. Okay, IBM we are talking about. IBM. International Business Machines Corporation. Okay, it's up 0.06% today. Now, what it pays as dividends? Okay, it pays 4% dividends. 4%. Oh, okay. For tech stock, actually, it's not so bad. I would agree with that.
Tech stocks tend to want to reinvest their money rather than pay dividends. That's been my experience in the Silicon Valley stocks. They think they can use the money better. But some of them want to attract investors, and paying a dividend is a good way to do that. Like HP, I think used to, at one point, Hewlett Packard became a company that started to pay dividends. But again, that's one of the things that I don't spend as much time on whether or not they're going to pay me a dividend, unless I'm thinking of selling it and I can wait for a month and get a dividend, and I might wait. But
Hey,
that's
Jim, you mentioned it earlier, but how many companies or employees actually encourage their employees to invest in the companies that they're working for? Because you mentioned that happened
yeah.
when you were at Charles Schwab,
Yep.
and I think you said a number of others as well. And I'm thinking that may be where even the founder got some of her investment, because I do know that she had some ties to IBM at one point as well. But I was just wondering
Yeah.
how much
I'm
of
sure
that.
IBM and matched. If you bought their stock, they would match a certain percentage of it. I don't know because I didn't work for IBM, but that certainly was true at AT&T. They matched 6% of what I put in. So
My view on dividends, beside it's a very, very strong contributing factor to your overall return, I view them as an incentive for me to hold somebody's stock. Because to hold somebody's stock, I must be compensated. I say, okay, what is your company doing? Okay, as well as I myself, it's really a garbage. But I'm willing to hold on your garbage for a while if I will be compensated for doing that. If you're not paying me any compensation, I don't need your garbage. There is enough good companies around. But you want me to hold your stock? What are you going to pay me?
Hey,
Oh,
Sasha, she also mentioned the airline industry, and I don't know how if anybody has thoughts, but she was saying that they paid well in stocks with Delta and Southwest and all in that way. And she did say that compensation was the matching. I guess that was with IBM, but she did mention that apparently Delta and Southwest, which are two airlines, have done well in terms of her stocks and dividends.
well, one of the things I can tell you about Schwab, which made it so attractive to so many of us, was that if you did well, they compensated you in stock options, and that was what really made a total difference in my life.
Back to airlines that Mark mentioned. When the Wright brothers took off at Kitty Hawk, I think it was in 1903. If since that time you owned every airline that ever was, you'd be losing money.
Yeah, and
I've
then also it depends on how much the price of oil goes up and how much the tickets they can charge and get away with. That's a very complicated industry to do well in investing wise.
I've just looked at record for Delta Airlines. It returned, as a stock is concerned, about 18% for 1 year, and it pays as a
Good.
dividends are concerned, it's negligible 0.18. It's 18
Yeah,
hundredths percent.
yeah.
So
Who cares?
somebody is making killing on Delta dividends. Mm, no comments. Uh, what was another stock was Southwest. Okay, we'll check Southwest. Maybe Southwest is doing a killing. Delta is not. So Southwest, okay. What do you think? What is the return on Southwest?
Oh,
South,
I doubt they are giving you a good dividend. I would be surprised if they are.
okay, first of all, for 1 year, actually it's down about 15, no, it's more, it's 20% down. Dividends, yeah, there is a dividend, almost 2.5%.
Yeah,
You know,
not
so,
enough
the,
to be
so
meaningful.
even dividend will not compensate you for losing 20% on the stock value. So how one makes money on Southwest Airlines? Please explain to me, teach me. I'm all ears.
No,
Mark, you have any idea?
No,
I think the point was if you worked for them, they were good
yeah,
compensating you.
right.
Not as buying, not as an investor, but as an employee. And
Hope so.
yeah,
Yeah, and I think that's
if your stock goes
So
down
actually,
20%,
the best way, if someone could work at the same time for Southwest, Delta, and IBM, and few other companies at the same time, then maybe maybe you will
But
get.
to your point, it's about being compensated as an employee. And I was actually having this conversation, I think I mentioned on one of our previous shows, with my cousin, who is a Georgia Bureau of Investigation officer, and he is thinking about retiring after going through some surgery on next year in 2024. So he's thinking about retiring either in 2024 or shortly thereafter and everything. But he is looking at either being a trainer at one of the police academies, or he's looking at Delta as a job. And part of that is because of the compensations he can get, and he can work fully remotely as well, because definitely you can work fully remotely. So as he is recuperating, he could be working and getting some pretty good perks. I mean, even as a law enforcement officer, he liked to go to a number of Latin American countries and visit them, and some of the Caribbean countries, and he could even have that as one of his perks should he decide to do that, and all along those lines. So I think that that's where Kim was going with some of the long-term perks and some of the things that take place. Because like I said, he will probably retire. I got that feeling that it will probably happen next year in the latter part, and he'll either be training future police officers or law enforcement officers, or he'll be working at Delta. He might be one of those people that answers the phone when you call, and all along those lines. But he'll get the perks of being able to fly around the world and everything.
Listen,
You're talking about the
I have to excuse myself. Somebody's been playing with my computer, low battery. My computer is about to die. So thank you for today, and I'll see you in 2024.
Great to see you,
Happy
Milan.
New Year to you.
All the best in 2024.
And just to say really quickly, Kim said dividends cover her bills, and Delta needs people to work holidays only, and they offer full-time benefits as incentives, including retirement. So that's maybe what some people are looking at.
That's all fine, except I thought it's investment show, not a job show. If you're looking for a job, it's one thing. If you're looking for investments, it's a completely different things. You cannot combine both.
Yes, and Sasha, even when I was talking about getting compensated in stocks, these stock options, when the dot-com bubble burst, I had sold a large portion of that. So as an investor, you have to be aware of what's going on. And when things get driven up, like I live in the heart of Silicon Valley, and all you had to do is put .com behind your business presentation to the venture capitalists at that time, and you would get money. And so
Yeah.
all of these companies were starting, but they had no revenue. And so, I look at companies that have no revenue and I don't want to touch them, so but these stocks got built up. They got just to crazy levels. And so I got out as much as I was allowed to, with my wife and I having some arguments about it. But
not only did they not have investment, some of them didn't even have a business plan. So yeah, there was a lot of those .coms that were out there in the left field in a lot of ways. So they didn't have money, they didn't have a plan, they didn't have a number of things.
And so revenue is key to when I look at a company. The lack of debt is key to me. These are the types of things that I factor into whether or not this company is going to make it or keep making it. It could be an established company that I'm thinking about buying, like Intel, for example. It's an established company, and it got hammered because it was dominant in its field, and then all of a sudden it wasn't. And now it seems to have had some more life breathed back into its lungs. I don't know, but they're starting to. And this is the other thing, is like you look at history, but history won't tell you that AI is coming around the corner.
Right.
And AI is all of a sudden the latest hot investment. And so if you're involved in AI, people are willing to give you money. However, there are going to be winners and losers in this field as well.
And an element that covers everything that we're talking about here is time. Time is an investment. If you lose $1, there's a very good chance you'll be able to make it up again. If you lose a minute, it's gone forever.
Yeah.
And we have to take a look at how much time we're spending on our investment activity.
I totally agree with that. And so, it's also something that I say is if you're enjoying it, great.
Yeah,
If
right.
you're not enjoying it, if you're staying up worrying about it at night, maybe it's just not the field for you.
No, you shouldn't do that. If you are worrying about that to do too much, there's no point. For example, before I'm going to bed, usually say 11 o'clock at night, I look at the futures, which it's indicative of what's next. They will be, although not necessarily so,
Right.
but at least some indication. So
Sure.
I see, okay, so Nasdaq is a little bit higher. Dow Jones is about the same. And you know what? Most days it's exactly that what you see. Nasdaq is slightly higher. Dow Jones is slightly lower. S&P is about the same. Okay, so you know that next day will be mostly positive because at
Yeah.
the same time you can look how the Japanese market opened, how the Hong Kong opened, and so you already have a feel of what's going to happen next day. But again, it's not indicative of anything at all. Okay, that's one thing to have in mind. To say that I'm worried about it, not at all, because the situation can change overnight, and it can whatever is positive could become negative, and vice versa. So it's this is
Worrying helps. Worrying helps because most of the things we worry about never happen.
Yes.
So if you worry a little harder.
absolutely, absolutely. Anyway, investment could be very inspiring, very interesting, and very profitable. And if you can combine all that, I think you would be very, very lucky person. So I wish all of you and our listeners very happy next year,
Thank you so much. Thank
2024,
you.
and happy and profitable and healthy and wealthy and everything what it could be done. It's my sincere wish for everybody.
Thank you.
So we'll see you next Wednesday, already 2024,
Yeah.
same place, same time.
Don't worry. Be happy. Thank
Thank
you,
you.
Sasha. Bye bye.
Bye.
Yeah. Bye.
He just quoted Bobby McFerrin.